It does feel like there's a total disruption of the asset management industry that's started. It's really early, but it's starting. Because the speed, index funds, the speed of which you can do that in a kind of new Web3 enabled platform is dramatically different. How you can build like Millennium, which is a hedge fund of multiple different fund managers. Well, platforms like Enzyme create the ability to do that decentralized. So therefore, you as an investor could invest across a whole bunch of different strategies and different people, of which it was not available to you before, whether it's accredited investor rules or just discoverability of finding these people. But with this kind of open Web3, you could scrape all of the data, look for signals on which managers you think. You can be your own risk manager. Okay, that's really, really interesting. It's not easy, but my guess is, people like Jump will have a team of people looking at independent traders operating on these Web3 platforms and backing them too. Because why wouldn't they? And why would Millennium not do the same? And why would Brevin Howard not do the same? They all will in the end. It's going to be not necessarily all on one platform or in the kind of fund buckets that we're used to. Obviously, regulation, that's the big issue. We don't know how it's going to solve for that. But this is a huge unlock, particularly in crypto, where the knowledge base is not with the guy who went through Goldman Sachs and ran a fund for somebody else and then spins off and gets the credibility. If you're an NFT trader and you've got 18 months of experience and you kind of know what you're doing, right, you could attract capital. You couldn't do it in a fund structure because nobody's going to give it to you. But in this online version where we can all discover that because it's discoverable and it's provable, the track record and everything, then we get an ability to allocate to a 22-year-old who's the wizard of NFTs. And we have the liquidity that we could move out when we think he's lost his touch or her touch. So I think that's interesting. And I think how we provide capital to markets will move away from the fund structure. It's really expensive. And the reason the lawyers in Cayman Islands are so damn rich is because of this fund structure. I mean, they're very highly paid people here because of the fund structure. Now, that goes away because it doesn't need to happen in all of the way that it's done. It's the issue is the accredited investor rules, but different jurisdictions will choose different ways of doing it, whether it's Switzerland or whether it ends up being Singapore or Cayman will allow people to invest in these kind of structures. And, I'm thinking through the fund of funds that I've set up. Right now, we're investing in the world's best digital asset hedge funds, but it's right on the roadmap to start providing liquidity to platforms where we can back traders. Why would we not? Because that's where the source of talent's going to be. And there'll be hybrid models as well, where to institutionalize them, they might need to go onto a different platform, a more, credentialized platform with better risk management. But all of this is going to be available. It's just going to open everything wide up to us all again. I think it will come. Firstly, we need a success story. Humans like the human story. So we need to see, here's the guy who's made, X from doing this. So we need to see some success. It's very early still for most of the platforms that are building this out. So we've yet to see capital coming in. And really, the crypto markets are kind of constrained by capital right now because we've got no new flows coming in net. So the network growth of Bitcoin, ETH, and the overall thing is not really growing. So we're seeing a lot of churn within, and that's typical of markets. That happens for a period of time. But my guess is, this is a part of DeFi that people haven't even thought through yet. Things are moving so fast that it doesn't attract much capital yet. But as the space grows, I think people are going to realize what this is all about. The DAO structure itself is starting to work and, starting to attract significant capital. People haven't thought about it in the decentralized asset management area and tokenizing either individual traders or pools of capital, but that will come for sure because everybody's working hard to solve it.